So if you are one of those who's looking to diversify your investment portfolio and invest in foreign stocks and equities, then this video is meant for you. There are broadly two ways of going about it. One is to invest in all those dream stocks like Apple, Google and Amazon directly. Now when you do that, you have to open new bank accounts, new demat accounts, you have to take the entire responsibility of managing this portfolio, and more importantly, there is a limit to the amount of money that you can remit through this route, and that is $250,000 per annum per investor under the Liberalized Remittance Scheme or LRS. However, if you are a first-time investor in foreign stocks and equities, then the best way of going about it is by investing in international mutual funds. And in this video, we're going to tell you 5 things that you need to keep in mind before you invest in international mutual funds. So what are the different kinds of international mutual funds? They can be categorized broadly in 3 ways. One, in terms of mode of investment. Under this, there are 2 kinds of funds. One are the direct funds, which invest in foreign equities and are locally managed by a local fund manager. And then there are the indirect funds, which are the feeder funds or fund of funds that in turn take all the money, pull it together and invest in global mutual fund schemes. That is mode of investment. The second category is the region of investment. Funds that invest in particular countries like the US or UK or China, and then funds that invest in certain regions like Southeast Asia or North America or Europe. And then there are funds that invest in companies across the world, which are global funds. So that is the second categorization in terms of the region of investment. The third is themes or sectors. Funds that invest in certain themes like commodities, like gold funds or agriculture or mining. And then there are funds that invest in companies in particular sectors across the world like the tech sector or retail and etc. etc. While there are a plethora of international mutual funds that you can choose from, the best way of going about it, especially if you're a first-time investor, is to choose international funds that invest in foreign stock market indices like the NASDAQ 100 or the S&P 500. Now bear in mind the NASDAQ 100 has given 10 years CAGR return of over 18%. So you can imagine the difference. And more importantly, when international funds are investing in foreign stock market indices, all the favorite stocks that you always want to invest in already come under these indices itself because they are the top stocks in their respective stock markets. And also more importantly, this mitigates the risks of investing in an actively managed international fund where there can be areas of judgment that could impact your investment. Number 4, investing in international mutual funds comes with certain intrinsic advantages. One is that you get to leverage the growth cycle of another economy as compared to the economy that you're already a part of. So when there is a downturn in your economy and the fund you're investing in invests in another economy which has a growth cycle, then you get to benefit from it. And more importantly, whatever is the differences in currency fluctuations also comes to your benefit. Bear in mind, the rupee has been consistently depreciating at about 6% over the last 3 decades, which means investing in countries where currencies are more valuable than the rupee, especially like the US, where the dollar value against the rupee has only been rising over the last 3 decades or so, then you get to take advantage of that currency price difference as well. Number 5. International mutual fund investments are treated like domestic investments and hence you don't have to go through any extra regulations. In fact, international mutual funds are treated and taxed like debt funds. Just bear in mind, if you're invested for a period of more than 3 years, then your international mutual fund investments do attract long-term capital gains tax. And with that, we've come to the end of this video. If you like it, please hit the subscribe button at the bottom of your screen. Thank you so much for watching. This is Krishna Kumar signing off. Keep watching Money9.